Okay, well, good morning, everybody. My name's Matt Burns. I'm the Senior Business Development Manager at SEEBURGER. I'm going to be talking today about some of the significant rapid changes we've been witnessing in real-time processing in banking and financial services, and how we see this as affecting the data integration needs of banks and financial institutions. Just a couple of points I wanted to kind of raise here, which will form the basis of what will be discussed and presented today. As a consequence of what we are all seeing as a rapid and transformative change in the market, integration and risk, which are both having a big impact on the way in which financial institutions are managing their systems and modernizing and integrating those systems. They're often being considered as a combined proposition. So risk combined with integration is a key element. So what we're seeing is some of the pressures on banks' internal resources and some of the touch points that kind of combined offering can bring, we believe has great potential for increasing speed to benefit for banks. Banks faced with the need to digitalize and modernize their systems to address and meet the demands of the real-time world. And I think because of this, SEEBURGER and SAS are working together in partnership around integration options, which we believe are going to be of benefit for financial institutions to consider. So I think it's worthwhile just restating some of the trends we see in the financial services industry, many of which we're all quite familiar with, but just looking through, there's a huge surge in the drive for real-time payment processing across the globe. 56 schemes in 56 countries. The volumes are rapidly rising. I think there's an example would be India. There's processing 41 million real-time payments a day. In addition to those domestic schemes, you've got the emergence of pan-European schemes, EBA, RT1, ECB TIPS, and of course the Nordic P27 scheme, which there's been a lot of publicity about that over the last 12, probably more than 12 months. And then of course there's been a massive rise in digital remote banking, contactless payments, and I think the pandemic has had a significant impact on the growth. They're quoting maybe 25% growth since March of this year in digital and mobile banking, and an estimate that in Europe alone the market's going to hit around $689 billion dollars worth of transaction value this year just through contactless digital mobile banking. The other thing we see, which has been fairly common and been quite evident over the last few years, is the change in regulations, risk and compliance. This is more and more pronounced with the growth of on-demand services, real-time transactions, open banking, PSD2, GDPR, and that is driving the need for banks to address that through developing more flexible ways of communicating with the outside world through the development of open APIs. And then we've got ISO 20022, which is an enriched standard for carrying more data between banks, other banks, but also between banks and their clients to improve precision and transparency and certainty of payment and improving reconciliation. The other thing we see is the growth and preponderance of challengers, disruptors, innovators. These are kind of born in the cloud, if you like, fintechs, paytechs that have been emerging, and alternative payment providers that are challenging the traditional banks. And I think as a consequence, those traditional banks are having to think of reinventing themselves more as service providers and not just as account providers. Over and above that, we've got a whole host of fintechs developing APIs that sit on top of these real-time rails I talked about, these real-time payment networks. And they're offering additional services to complement the payment process, request for pay, direct debit, corporate batch payments. There's a whole host of different services that are emerging. And all of this ultimately leads to enhancing the customer journey, the customer experience. And I think these are trends we all witnessed, but I think it's important just to restate some of those as we go through the presentation today. So I think in light of some of the macro market challenges and the speed with which financial services market's changing, I've tried to encapsulate some of the challenges that we at SEEBURGER and no doubt SAS see being imposed on banks and the FIs as a consequence of the change in the industry and the rapid change we're seeing. I mean, customers, these could be corporate customers, individuals like you or I. There's been a big drive for a simpler, secure, frictionless experience for payments. There's not much, I think people want on demand. They want to know that payments are made quickly. They don't actually care how they're made. They just need to be made, and they need to know they have evidence that they've been made. And then they want straightforward connectivity. And the other thing we're seeing, as I mentioned before, is the need for enriched data. And you've got initiatives such as Swift GPI and using the IS2 20022 message formats, which will carry remittance advice data and additional data to improve the reconciliation process for banks, but also for the beneficiary who's ultimately receiving the payment. The other thing customers want are, as I mentioned before, complementary services. So we're seeing the emergence of real-time services for treasury, trade finance, cash management, etc. There's a big drive towards that. This has ultimately an impact on back-end systems. The back-end systems are the main barrier for banks in terms of their ability to keep up to speed with the changes in the real-time market. You've got complexity with the older legacy systems, interoperability challenges between back-end systems and the emergent channels that the banks are developing and having to convey to build and secure their customer base. And as we know, that the older systems are typically very costly to maintain, and any changes are expensive. And we've seen that 90% of technology budgets have been dedicated towards maintaining those older systems. The other thing to highlight here is the back-end systems are traditionally batch-based. They were never designed for handling real-time processing, and therefore they're not agile. So that's what we see as a significant challenge and pain point. The other thing is the related processes we see to payments, fraud and AML. There's a more and more pronounced importance in this particular area as a consequence of the growth in real-time transactions. And Ian from SAS will be talking more about this after my presentation. This ties in with compliance and risk mitigation and the whole onboarding and know your customer experience. So what I've wanted to present here is a specific response to the market. This is a particular example of how we at SEEBURGER have interpreted some of those challenges and issues and how we're addressing those through the provision of a payment integration cloud hub service. As I mentioned before, customers are more diverse, they're more sophisticated in their expectations and more international and cross-border. And I think as a consequence, the experience could potentially be damaged if they're not getting the real time and the value of service from the finance institutions and bank providers. What we see also is a growth in message and file formats. Now, as I've mentioned, real-time transactions are growing, payments, banks are also looking into providing real-time cash positions for corporate clients so they can enhance their liquidity. But also, I think we need to be mindful of the fact that bulk and lower priority payments and traditional payment methods are still here to stay. And as a consequence of that, you've got to support a whole host of different file formats. Here I've outlined some Polish, Romanian. We've got the newer ISO 20022 formats, Swift, SAP, Edifact, and JSON and APIs. So banks are now faced with having to deal with a growing number of file formats, whether they be real-time or traditional. That, as a consequence of that, that is placing an overhead on the bank. It's affecting the client experience. The customer account teams are pressurizing IT, and there's a potential threat, a competitive threat and loss of revenue if the bank doesn't meet and address and support these different file formats. And indeed, the connectivity methods that we're seeing growing, REST APIs, SFTP, EBICs, which I know some of which have been around for some years, but nevertheless, what this represents is an integration, messaging, connectivity challenge for the bank, which ultimately places pressure on their IT for capacity, admin overhead, and also affects their ability to time to live production. So, as I say, this is a specific example, but one which we are heavily involved with, and we've seen many examples of this with the financial institutions with which we're working. So I think if you sort of drill down a little bit, what we see based on our experience with FIs is 7 different functional areas which banks have to solve, from onboarding all the way through to payment reconciliation. So the payment integration hub addresses many elements of that, from onboarding to validating the file formats that come in, transforming those into an internal or canonical format which the bank can accept. And then that would be passed off for compliance and governance and risk to expert systems. In this case, Ian will talk about this later, but the SAS fraud and the AML systems to perform the necessary checks on those payments before they're released to impact on back-end systems, but ultimately be pushed out to the value networks, whether they be a real-time payment or a lower priority payment for ultimate reconciliation. So I think it's important to sort of stress that is an area that the Payment Integration Hub addresses all those different stages that we see common to financial institutions. So just looking at the Integration Hub and based on some of the real life examples and clients we've been working with, there are a series of benefits which can be derived from introducing a Payment Integration Hub service. And if you look at this from a system integration perspective, Payment Integration Hub gives a number of different options using the Agile technology that's built within it. We have access to and provide connectivity to the real-time gateway interfaces, so the gateways the banks may already have purchased to access those real-time payment services that I was talking about at the beginning of the presentation. ERP AP integration is fundamental. The ability to take any file in any format from any accounts payable or ERP system and transform that into an internal format. And then, of course, something I mentioned before, which is key to the presentation, is the interactive link between this integration platform and the fraud AML processes that are necessary to clear a payment or a group of payments for a subsequent settlement. The other thing we have is the ability to support a number of different transactions, anything from the real-time high priority to a next day bulk single or low. It covers all aspects of the payment world. And then on the flip side, the ability to provide through real-time API inquiries, cash reporting to corporate clients, and also provide a more traditional file-based option for issuing intraday or end-of-day report data back to the corporate, so they can reconcile their payments against the account positions. From a customer and bank perspective, the onboarding experience and self-servicing provides a better experience through interactive testing of data and message formats. And something that's key and we're seeing a huge change and demand for is the ability for banks to access services that are born in the cloud, services that essentially will enhance the product and service they could provide onto their corporates. So CRM, ERP, foreign exchange, spend management, e-commerce or procurement, or indeed public cloud access. And all of that leads to enhanced satisfaction levels. Overall, the benefits for the bank are through the intervention of an integration hub, cloud services as this example, meeting their growing client demands, the more sophisticated demands, effectively capturing financial flows and accelerating an opportunity to gain revenue. It also gives them the ability to focus on the market and not be overly concerned with the messaging integration mapping that can be outsourced to a third party, in this case, a payment integration hub provider. And this platform enables better client acquisition and ultimately retention and time to market. Oops, excuse me. So this is an example of where a payment integration hub has supported modernization and digitalization for a large global trade bank. The key drivers there were the ability to support real-time payments, but also to support a global channel replatforming exercise. The challenges they had were around restricted scalability and transaction and physical volume constraints with the existing channel. The experience with the customer was degrading as the channel was probably about 15 years old. There was poor traceability of payments and payment-related data. Reports were not in real time, and neither were payments. There was no self-servicing, so customers couldn't get onto the platform through a self-service model. And of course, that had an impact on the time to market. The bank in question was driven by a need to expand to new territories, address financial crime compliance, which again, Ian will talk about. There was a regulatory need, and that system was just not up to scratch. There was a need to drive down cost and ultimately that overall digital transformation drive so that the bank could remain competitive. So that is essentially where SEEBURGER came in to provide a payment integration hub, where we supported transformation, including the creation and deployment and management of APIs, onboarding, activity monitoring, track and trace, migration, and also sharing our years of experience and best practice. So the system is in place and is processing over 1 billion messages per annum. And I think just expanding the picture and just recapping on what we at SEEBURGER do, we provide a hybrid integration platform. The payment integration hub is essentially a subset of this overall picture, but this is essentially showing the wider ability to support replatforming, cloud integration, secure managed file transfer, payment modernization, open banking, real-time payments, digital client onboarding, other digital innovations, and compliance and regulation. So providing this straight-through connectivity between a bank's back-end systems, whether they be an accounting system, omni-channel CRM, or the SWIFT gateway, and the customer business partner accounts payables, ERPs, treasury systems, and in the process supporting a whole myriad of different file formats, message standards, and connectivity methods. And just to say a few words about SEEBURGER, we've been in the business of integration for over 30 years. In fact, we were one of the early practitioners of cloud global cloud integration even goes back 15 years. We have a worldwide presence, 27 offices and customers in over 50 countries. We have 1,000 employees and 10,000 customers. The integration is our lifeblood as a company, very heavily involved, as I've mentioned, in financial services, but also in other vertical markets. And I'd just like to thank you for that and hand you over back to Michael.
Thanks a lot for that, Matt. I think a very insightful presentation right there. So thank you for that. And instead of doing the questions right now, I would like to go on directly to the second presentation, and then after the second presentation, we will tend to introductions of attendees and follow up with the questions and a discussion. So Ian, whenever you're ready, I see you're ready right now. All looks good. We see your slides. So please go ahead and give us a great presentation.
Thanks, Michael, and thank you, Matt, as well, for that introduction and the reference to the collaboration between SEEBURGER and SAS. I'm Ian Holmes. I'm with SAS's Fraud and Security Intelligence team, and I have nearly 20 years of industry experience across banking as well as vendor roles. As Matt indicates, the coming together of real-time payment capability as well as fraud is kind of in lockstep at the moment, and the changes which are occurring within payments are equally affecting both of these areas. This is a report available online. The link is at the bottom of the slides, and we can certainly provide that. But it's actually a world payments report issued by Capgemini. And I think that it helps encompass what each part of our discussions across Matt's presentation and my presentation we're discussing today. In the left diagram, it talks about APIs, about B2B activity, and from a SEEBURGER perspective, that's going to be key. And then on the in the same diagram, from a fraud perspective, it's talking about the industry moving to faster money, and this ultimately means there's a risk of compliance issues and fraud issues, which I will come into. On the right side of the screen, it's citing, of course, risk management as being some of the key areas, and tracking those payments. And so that's of course of great interest. And then the treasury and corporate connectivity is firmly under the SEEBURGER. So I think this report is really a strong report, and it's nice to see and start off with there. If we talk about that risk management perspective mentioned in that report, then AML has historically had a very strong customer perspective. Customer due diligence, or CDD as it's known, it's been around for a long time. It's talking about the ability to continually assess the risk of the customer from an AML perspective. And in fact, sometimes that assessment is done at a higher level than the actual customer, and it's done sometimes at the household level in order to see interactions between different parties within a household, as it's sometimes known. Fraud solutions have had this ability to look across the different channels, the different products that we all know from a banking perspective, whether that's cards, debit, credit cards, whether it's from a payments perspective, and also some of the other interactions we have through branch, ATMs, etc. So they've certainly had this capability, but the need to break down those silos, certainly within banks from an operational perspective, have sometimes been very difficult. But with the advent of some of these new payments and the fact that customers are utilising their digital devices, and as Matt mentioned, they don't really care about how it's facilitated, they just want it to occur. And so banks are really having to consider this customer-centric, this 360-degree view, holistic assessment, whichever term you want to use, in order to achieve this. So AML has historically been the process, the focus of settled payments. We have to enact on things which have happened. Whereas from a fraud perspective, we've historically looked at payments before they occurred. And that's even true in the real-time world. And as Matt mentioned, as the processing of those payments speeds up, then the speed at which we do a fraud assessment also has to increase. And we'll talk about some of these aspects as we go through this presentation. Regulations have certainly been a driver. PSD2 is top of mind for everyone in Europe. This is really opening up the payments environment, taking some of that control away from the banks, and it's really driving and ensuring that activities like fraud detection and AML protection are key. At this stage, I will just talk and reference AI and machine learning, which are becoming key in both avenues. Whether it's looking to sanction screening from an AML perspective, this is where we have to ensure that we are not sending money to certain known individuals or known businesses in the world, which may be involved in terrorism financing, and you can see that at the right hand side of the screen, CTF, counter-terrorism financing. But then in between that, we have a range of different fraud and AML areas, including looking into trade finance. So what are the drivers in the industry? And Matt certainly covered a few of these. Regulations are certainly beginning to take hold. They've been governing AML for a long time, and in the AML area, they are certainly gaining increased strength. For example, in some countries in Europe, we are seeing that the typically batch processing required for AML is actually shifting to more of an online AML process in order to be able to assess and is driven by the quicker and speedier movement of money. From a fraud perspective, we're also seeing increase in regulations and bringing some of this these remote payment processing activities to the fore as we have to fight financial crime. From a digital transformation perspective, direction for a long time. It's a great way to embrace new generations, the Generation X, etc. They're expecting to be able to do things on their devices, and it also serves a purpose to banks of cutting costs. We cannot ignore the stimulus of COVID-19 and the effects that this has brought upon digitization, and the fact that people who had an affinity to some of the older channels, such as branches and phones, have just not been able to access their banks through these methods, either due to closures of the branches or the ability to staff the increased volumes through the phone. So digitization has probably been brought forward by 5 or 10 years. It's probably one of the few things which banks can be happy for in light of the current pandemic. But it has undoubtedly brought new fraud exposure with it, and this is for those who are not as digitally savvy as they may need to be and have been forced into this channel, then they are going to be at the impacts and benefits, of course, come down to costs quite often. So the cost and resources involved in fraud and financial crime coverage is very high. AML has certainly had a problem with this for a long time in terms of the obligation to create alerts on certain spending and activities, and this is unfortunately driven by regulations. Fraud is more of a risk assessment by the bank, but still there's undoubtedly operator involvement in verifying and confirming the fraud. And so what we need to do is look to ways that we can make this more efficient, and modelling and AI certainly remains an untapped resource across most of fraud and financial crime, and open source capabilities and the availability of resources who can utilise open source machine learning methods where banks are really capitalising. In this slide, we just talk about some of the processes, and Matt has done a great job about talking about the different data sources that we can consider here. So he mentioned SWIFT and the international movement of money through that industry standard. Payments, of course, are changing and morphing from some of the older style of BACS, etc., into the SEPA environments, as well as digital transactions, which each and every country is actually investing in for those typically smaller amounts, those smaller volumes, as really a competitor to try and take away the stronghold that Visa, MasterCard, etc. have had from a plastic card payment perspective. But then we also have the ability to go into some of those documents, the remittances, etc., which Matt spoke about. So the orchestration of bringing all this together is key. And one of the areas that we're really seeing this expanding is trade surveillance and trade financing. Network technology is changing, and so the ability to process these payments at higher speed is of course key. What we're able to see in some of the documentation is that we're able to see invoice details now with a high degree of data within it. Previously, if you wanted to digitize some of these invoices, it meant OCR and then scanning those documents in. But now with ISO 20022, the fraud system, the AML systems are capable of seeing this data, and we're able to really look at some of the shipping details, the lines of credit, the bill of landing anomalies which are available in this invoicing details as we look at trades. So we can look at risks such as vessel misrepresentation, phantom shipping, ghost companies, beneficial ownership, and these are all key to being able to identify fraud and AML risk within these payments. SAS have done some assessment, and we were able to process some of the MT700 SWIFT messages, and we processed through 9,000 of them in order to look for boycott phrase detection, and this historically took 5 to 7 minutes, but SAS was able per transaction, but SAS was able to do this in under 500 milliseconds. With an 85% accuracy rate, utilizing some of our machine learning capability. So it really shows you what's possible out there, and military and dual use goods are also key from a new AML threat perspective. If we look at some of the requirements within the industry, it's sometimes difficult to distinguish these between fraud and financial crime requirements. And we are certainly seeing a merge. If we think of fraud at one end of the spectrum and historically AML at the other, they're certainly coming together, and that's key within the industry. In order to achieve these requirements, then we are needing to ensure that our solution is flexible enough to actually be able to utilize the same data in the same engine, using some of the same processing, different application of machine learning algorithms in order to look for the different risks. But there's no longer any reason to have dual processing across some of these areas. If we think of sanctions, then there is no need to actually process a transaction twice, once for sanctions screening and once for fraud screening. We may as well do that in combination and place a hold on that payment if necessary due to either of those risks. From a fraud perspective, scams are one area of payments where fraud losses are certainly increasing. The fraudsters are producing many variations of scams, and COVID-19 again has allowed them to kind of penetrate the consumer and corporate areas in order to really increase the volumes and value of fraud which is occurring. Google has indicated that they're blocking 18 million coronavirus scam emails every day. So that just shows you the level of pressure which the fraudsters are placing upon the consumers. So in today's world, we're seeing that this is occurring through these remote activities. The fraudsters can be anywhere in the world and can be quite targeted, or can have, mass blanket type threats. And this can be going on through emails, phones, SMS, and actually in combination. And so in a recent FBI internet crime report, they list 30 different types of scam. And on the left-hand side of the screen here, I extracted the top 5 by number of instances, the total losses, and also the loss by case. And you can see that the payments fraud is at the top of each of those lists. And in 2 of the lists, it's something called business email compromise. And this actually represents one of those concerted attacks across channels in order to dupe payment administrators within businesses to actually enact upon what is thought to be an email from their CEO or CFO to make a new payment to a beneficiary. They receive the email. It's actually an email from not their email domain. It's from one which looks very close, and it actually spoofs their own email system. And it actually conveys to them that they should make this payment, and they actually take that. They're so frustrated and worried that they need to do something for the CFO that they throw away all of their inner assessment and judgment that the risk of this potential request, and they actually make the payment based upon that, quite often distributing it to their peers who may have to approve or authorize these payments. And it's actually they're finding that the total losses per case is often in advance of $130,000 and so that is certainly worth the effort that the fraudsters have to place on achieving just one of these scams. But also from a consumer perspective, as in 2017, UK Finance, which is the industry body reporting on all banking fraud types in the UK, of course, they actually introduced a new measure covering what they class as authorised push payments. And this category specifically cites that the genuine account holder is involved in making the payment. So it's no longer a fraudster who's trying to dupe the bank, it's the fraudster who dupes the customer, and the customer willingly makes these payments to the fraudsters as a beneficiary. And this is increasing dramatically. Advanced analytics. So what we're seeing here is that there's an increase in self-learning concepts. This is where the system receives initial instructions during development, but then it learns on its own, and it really makes a high confidence model which can be deployed into the system. So what we're also seeing is that the algorithms being applied are increasing. We historically saw some simple logistic regression, linear regression, as well as the random forest, but that's really increasing into things like neural networks, gradient boost, etc. And then we have the concept of supervised and unsupervised, which really relates to the availability of targets or fraud markings, known fraud markings, in the data set upon which the model is built. If there are no fraud markings, then it's classed as an unsupervised model, and we're looking for anomalies. If it has targets, then it's something for the model to focus upon, and it becomes a supervised machine learning model. And we can have variations between these as well. Just to talk about cognitive computing, this is where we're able to apply specific human-like tasks through a modeling capability. And it really doesn't just look for risk, but it actually interprets those risks and makes them human readable. So what we're actually seeing is examples around speech to text, natural language interaction, and natural language generation. Things like help bots are often utilizing some of these cognitive computing areas, and also image processing and facial recognition. And these are key for authenticating customers when they're trying to make some of these payments. You know, you will all know that our iPhones, for example, are able to utilize our Face ID now in order to allow access to the phone, but they're becoming important in order to actually authenticate the person making the payment, rather than having to type in passwords, memorable details, and even two-factor authentication. So this is the SAS approach. You know, we know from a data perspective there that we need the information from what people like SEEBURGER can provide, and that data is expanding, and therefore the analytics we apply to that is going to change. We then also have to apply decisions to that, which we would, you know, if there is risk such as AML or fraud risk, we would be able to pass that back through SEEBURGER in order to be able to make a hold or request an alternative authentication to further validate that a payment was genuine. But then within the SAS system, we also have the ability to allow the bank to investigate and assess whether that was a genuine or fraud or risky payment, and be able to certify that and validate that with the customer, or do an investigation and maybe then submit some of the regulatory compliance requirements and reporting up through the chain to verify that. And then, of course, visualization of this data. It is no good providing a data dump of all the information which SEEBURGER can provide to our fraud and AML systems to the operator. They want something which is quick and easy, so that that operator efficiency can be as key and as high as possible. And then, of course, reporting and making sure that the capability of the solution is high there. So that was the area I wanted to really cover. This is just a slide talking about SAS. So a global company with around 14,000 employees globally, and we have a very high customer base from a banking perspective. And so very happy to be working with SEEBURGER, not only from looking to joint opportunities, but a tighter integration between our systems. And Michael, I will pass it back to you.
Thanks a lot.